This is separate. I'm not recording audio on the phone.
Got it.
I am, but we're not going to use it.
Okay,
This
got
is much better.
Okay.
So that gives a starting point for both audio and visual.
Oh, cool. Okay.
So Steve Gadaleta, Redwood, thank you for joining me today, and I look forward to this conversation.
Well, Tim, thanks for having me on this beautiful,
Yes.
beautiful sunny Chicago day and this
A typical sunny
atmosphere
Chicago
here.
day.
Right, absolutely.
Yeah.
I imagine it looked quite different 2 months earlier.
Just 2 days earlier. Try 2 days earlier.
It's been
How does Redwood serve private equity firms and their portfolio companies?
Sure. So ultimately, what we provide is a more efficient, more responsive, and more cost-efficient supply chain.
Mm-hmm.
So that's the result of the time we spend with private equity firms and the organizations that they're managing. So the way we do that is that we offer a comprehensive but flexible transportation management process that looks for and identifies pain points, hidden costs that most likely are not easily identified or
Sure.
evident, or they would have been addressed already, right?
Sure.
We do that by doing an initial exploratory with those companies and including both gaining insight from the individuals who are doing the tasks, their leadership, and of course analyzing the data. That gives us some good direction on where we think there's inefficiencies and opportunities. And from that point, we deploy our logisticians and logistics experts to confirm that and quantify it.
Mm-hmm.
And we return those that assessment and studies to the firms to then have a more robust discussion about where we can have a starting point to realize those savings.
Yeah. Before we dive, how did you go from being a metal bending manufacturing CEO to a logistician?
Well, great question. And as with all of us, we're always trying to expand our skill sets and bring those experiences to bear. So after 20 some odd years in transportation that we obviously leverage with Redwood Solutions today, had an opportunity to run an organization that was based on private equity concern and investment.
Yep.
So had the opportunity to understand the value levers and expectations of private equity ownership. And so it gave me the opportunity to bring those skill sets to bear with Redwood to combine those transportation experiences and knowledge that I have with the needs and expectations of private equity.
Yes. Good. Private equity firms, there's a couple big stages in their investment cycle. The first one, of course, is pre-close, before they buy the company. We do a lot of work with operational diligences to help a private equity firm understand what latent value is there in this company before they buy it.
Sure.
Tell me, how does Redwood, or how would a private equity firm, how could they leverage your service pre-close to understand the potential value?
Sure. So the same analysis that we do and bring to bear with any organization, we can bring to bear to help with that due diligence.
Mm-hmm.
And it is, as I shared earlier, a comprehensive but flexible approach where we have the opportunity and expertise to look at all aspects of the supply chain and uncover any of those areas where there's hidden cost or inefficiencies. So those same skill sets can be applied from a due diligence standpoint.
Yep.
In advance, obviously, to help identify if there's hidden value in that acquisition.
Right. Very good. Yeah, the one thing that's always struck me about your service is that the approach you take, this is probably the lowbrow version of what you do, looking purely at freight, which is often a big spend for a middle market manufacturing or industrial company, and the ability to come in and do a benchmark to say, look, here's how you rate, and you have your own tariff that you can use to make sure it's an apples to apples comparison.
Absolutely.
Yeah, that to me that's a very highly appealing service to a private equity firm. It's concrete.
Sure. So specific to that process and the tariffs and the freight payment audit that we bring to bear to support our customers, we got that our start really supporting the Fortune 50 with customer-based transportation tariffs, and so we were building those for the largest companies in the country, and recognized that there was a need at the middle market, and as a result developed our own tariffs and have now been supporting the middle market as well, and really bringing to bear some of those same processes that in the past would only be available to the Fortune 50.
Yep. You're at a cocktail party, and you bring up and talk about what you do, and they say, I kind of have an inkling that we're not firing on all 8 cylinders in regard to logistics or freight. What questions could you have them ask the management team, or what could they look into to determine if they should escalate? Like, should they make this a priority? Is there fire? Is there smoke
Sure.
that tells them there's fire?
Sure. So first I'd have them buy me a drink.
Yeah, maybe a cigar?
Have to have some return on that investment of my time and energy. But once we got that settled, so at the highest level, and you think about where these private equity associates, partners are entering into the firms, I think the first question would be, how robust is the data? Is the data robust? Is it giving you the information that you require across the organization and the supply chain? Are there desperate systems? Is it painful to get the information? That is probably the first indicator, and likely the most readily available and evident to the private equity sponsor. And then you just continue to probe as all good leaders and managers can into then, is the information actionable? And is it actionable on a real-time basis? So if we're thinking about optimizing the supply chain, are we utilizing that information to make decisions on a daily basis? And whether that's in warehousing and dock efficiency, is it in the inbound movement, and I'm managing my vendors in a way that's dynamic and optimizing my supply chain and taking full advantage of not allowing the vendors to make those decisions, but we are, with real-time information, to consolidate and move those loads efficiently. And from an outbound standpoint, utilizing that information to optimize as well. So information, and then is it actionable and readily available? Then we can get granular and think about, so how are the processes, how the process has been determined, how frequently are they being reviewed, from a process standpoint, from a supplier and vendor standpoint, or do I have a robust number of vendors, and how did I come to utilize those? Was it through a relationship?
Right.
Was it through ease? Potentially because of the higher issue of a systems issue, now I'm allowing to incur cost from a deployment standpoint by utilizing a supplier that can cover that up.
This is what I heard you just say. Ask them how they developed the fleet of carriers they use today. If it's not a competitive bid, if it wasn't something done in the last 5 years, if it hasn't been checked, if it hasn't been market tested, there's a good chance there's value.
From a provider standpoint, you are spot on, and I think you and I chatted in the past as well. Are they too consolidated?
Right.
There's a fallacy that if I can go to a small number of single vendor, then I can leverage the best price. Now, you may well get a good price for the volume, but is that the best vendor with the best rates on any particular lane? And so taking a step back and look at the value that Redwood can provide, we are able to do those analytics and align the right resource for the right lane at the most competitive price.
So the same discount from two different carriers doesn't mean the same price on a lane.
Exactly right. And if you can move to one tariff, then you eliminate all of those variables.
We're not comparing apples to oranges, it's apples to light bulbs.
Exactly right. Exactly right. So stepping back to your original question, it's really about, do you have easy access to information? Do you have systems that are communicating, or are they making it very difficult to garner information? Is that information then being actionable? And then how are you managing the processes? And
today, we've got a tight labor market. Okay, we've got tighter policies than we've ever had before about how many hours a driver can drive. Is there room? Like, are you finding companies today, if you do the look and you look at their supply chain, part of it's the freight piece. Are we overpaying for freight? The second piece might be, our mode optimization, right? Are we using the right mode? The third one might be the distribution network. Do we have our goods and our inventory in the right places to minimize the overall cost? Are you finding opportunity today, or are you finding that the tight labor markets and all the work everybody's done in the past to negotiate, it's all the low-hanging fruit's gone?
There's absolutely opportunity.
Sure.
And what I'd share is that the critical component is that you have the wherewithal to investigate all of those aspects that you just identified. And too often, what we find is that a provider or an organization has a capability or capacity to do one of those activities and not all of them.
Sure.
And that's really where Redwood differentiates itself, because we made the investment and have built the capabilities to do the simple rate comparisons, simple lane comparisons, right, and then go more broadly to mode optimization, to evaluate distribution patterns and such. So the answer is that all of those need to be explored, and explored obviously efficiently and timely, and then identify and sit down with the client and the equity firm and discuss which are going to be the most advantageous and the shortest putt to realize the best result.
Right, very good. Can you tell a story, an example of a client recently where you found, I like to call it latent value.
Sure.
It's hidden value. It's value that was always there. They didn't know it, or they weren't able to act upon it. It wasn't identified, but you helped them identify it and then realize it. Just talk us through one. How did it go?
So one that comes top of mind, very recent, and in the Midwest here, right?
Sure.
So a second-tier provider to the automotive industry had just recently made an acquisition. So now we have really two cultures, two sets of processes that they were guiding the organization through to pull together. Probably not unlike what our private equity firm companies deal with all the time as they make their initial acquisition and then scale from there.
Right.
So they recognized that they didn't have the visibility that they'd like to have, and they were concerned that there was legacy issues in regard to their procurement activities.
Sure.
And so they brought Redwood in, and we were through our analysis, we identified that they certainly had opportunities from a procurement standpoint, and they had a systems issue where their systems were not communicating. Tracking and tracing was very difficult, labor intensive. Freight payment and audit was very expensive as well, because they were dealing with multiple carriers and having to deal with each of those carriers' processes.
Sure.
Literally doing a manual freight payment and audit. And so we were able to demonstrate a save, both in hard costs with helping that customer move to our base rates, and then realizing soft costs with track and trace, and with us handling all the freight payment and audit through our processes.
So in this example, and maybe you could talk about a range of examples, when there's opportunity in freight, or mode optimization, or the distribution network design, however, from simple to the complex, what's the range of savings? Is it a 0 to 1% thing, a 1 to 5?
Sure, I would, it's
I'm sure it's a wide
certainly
range.
relative to the efficiency of the organization that we're working with, but it is common for us to see a save in the low to mid double digits. So we're
Yep.
talking in the 10 to 15%.
How often do you go in and say, they're killing it? There's really not like, we can always make a small improvement. Like, I'm not
Sure.
talking about that, 1 or 2%, but how often do you go in and there's not 5 to 10% savings in some portion of logistics?
It's very rare,
Yeah.
quite frankly. It's very rare that when we allocate the level of resources and skill sets that our organization can bring to bear, that we don't uncover those savings.
How often is it that they need to expend a significant amount of CapEx to realize those savings?
So very rarely, and again, it's relative to the solution and the needs of the organization. So if there is a high degree of need for a management system, then there certainly can be an investment there, but the return on that would be very short and robust.
How hard was it for you to identify, to identify that savings exists, to develop in your mind confidence that savings exists, and to reasonably document that for the management team or the sponsors? How long does that take? It's a range. It depends
Sure.
on the complexity, but
Absolutely.
the short to the long.
Sure. So incredibly hard, we'll share with you
Yes.
in regard to the model that we've built. And so it's not an easily replicatable model, but we have made it relatively efficient. So for our clients, we will be able to, after we have the opportunity to do the initial exploratory and receive the data that we can then analyze, we can have that turned and have a good conversation about where those opportunities lie as quickly as 10 days.
Wow.
And if it's more robust and we're looking at multiple distribution points and the efficiency of a pool points to multiple destinations, then we can certainly see that go out to possibly 2 weeks.
Okay. And what's great about that is you got exclusivity periods are short these days, but
Sure.
usually 2 weeks would fit to make something actionable. If there's data in there pre-close, obviously post-close can take as long as you need, but pre-close 2 weeks, you know if there's oil under that farmland.
Absolutely.
Yeah, good. So the last piece of this, Steve, is you get to take a couple minutes if you'd like. You're talking to a private equity sponsor or a board member or a high-level executive, and they know you work related to logistics, and you want to make one point to them, just one point. Take this away, and it will add value to your company. Okay, and I'm totally putting you on the spot.
Sure.
So take your time if you want to answer, but take 2 minutes to.
Sure. I guess what I'd share, Tim, is that we would recommend exactly the path that we followed. So we put our money where our mouth is.
Mm-hmm.
We have invested in a cross-functional capabilities within transportation. So the ability to move all modes, the ability to do the analysis, to manage and provide warehousing, flexibility to manage as little or as much of a transportation mode and organizational needs as is required for an organization. And we have the capabilities to assess, implement, support, and augment transportation management systems.
Okay.
And so we've made that investment because we know how important it is to be able to cross-functionally support and improve a supply chain. And so if I had one thing to share with the private equity firms and their leadership of their companies, what I would share is that make that same investment in your supply chain. Understand it holistically and bring in partners that can help aid and support you in making that supply chain as efficient, reactive, and cost efficient as possible, and use it as a competitive advantage in the marketplace, not only from a cost standpoint, but from a service standpoint, to allow you to compete and grow your businesses.
Thank you, Steve. This was such a joy. Very, very good, very interesting. Thank you for stopping by and taking the time.
Super, thank you.
All right.
Appreciate it.
Time for that cigar?
Yep.
All right.
So how'd that feel?